morning, and again, it was live. It wasn't a hindsight discussion. It was a live discussion on the right-hand edge, correct? So a lot of people think that they come in and they maybe, we maybe talk about everything that's on the left-hand side. No, we talk about everything that was on the left-hand side to catch up with the right-hand side of the charts. And what we were identifying live in the room around about this area here was we were identifying this value divergence to buy. Remember, if we're buying the blue line, we're buying gold. If we're selling the red line, we're buying gold. And we were trying to highlight to everybody the fact that, well, if we stay below this area here, if we stay below this area, but we're getting lower prices, we should be good to go. And obviously, when you see these big surges in volume is what we were highlighting, yes? We were highlighting these big surges in volume in these value areas, suggesting that somebody was absorbing an awful lot of trade. Well, that's somebody absorbing a lot of trade in this type of environment tells me that there's a big buy trade coming into the marketplace. This was all live. Literally, it was all live on the right-hand edge, guys. So what happened? Well, you can see what happened. This big buy trade, remember we said that's the best one of all. This big buy trade turned out to be a 71 to 78 top edge. It turned out to be a $700 live trade winner. $700. Now you might be arguing that you'd have taken it out earlier at 76.5. That's okay. Take out the prior highs, big volumes. Absolutely. No reason why you wouldn't highlight that as a possible exit. It's not the point I'm trying to make, though. The point I'm trying to make is that we called this without looking at the price charts. We called this bottom edge without looking at the price charts. And that's what's important. So when you start seeing a situation like this evolving on the right-hand edge, you're starting to say to yourself, okay, well, I don't need to see the price charts. But what I do recognize here is the pink line is no longer really making much lower lows, but we are getting a very significant bid coming back in the blue line. And what that does is it starts to cause a snapback effect. And we use the word snapback. It used to be an old phrase that was used in the markets every now and then, this idea of the snapback. But a lot of people in the likes of the Bollinger Band space started to use it. And it kind of lost its value because the Bollinger Bands obviously is just a moving average deviation, isn't it? So it's got nothing to do with value. It's just to do with price action. But this is value snapback because this is arbitrage. Remember, this is arbitrage. If this gets too wide, it becomes arbitrage. If it becomes arbitrage, something's going to snap back. And if we can get value divergence, we know that there's a snapback opportunity. So I can see there's a snapback opportunity here. And in addition to which, it doesn't look like much, but you can see the volume is actually above the zero. So what I'm looking at here now is I'm looking at the possibility of getting a short sale on gold. Does that make sense? From this morning's classroom, remember these were buy trades. So you can see the exact opposite here, the blue below the red starting to diverge off a high. They were all buy trades. Well, this is a sell trade because the blue is now above the red. This is a sell trade opportunity. And they're going in opposite directions, which builds the probability of a snap back on the pink line. If the pink line rallies, of course, that's always going to be linked to a sell on gold. So when we understand that, does everybody recognize the opportunity to sell gold? Does everybody see it? Everybody see it? And the second sell was even better because the red line actually rallied. That's a no-brainer. That's the kind of trade that you dream of as a gold trader because that's a no-brainer sell on gold right there. And obviously that sell just went from a price of 77s down to 71s. That sell was worth $600. $700 on the way up, $600 on the way down. You've just done a round turn of about $1,300. Now, the yen didn't help you on the trade, and that's obviously one of the reasons why you might not have taken the first trade in the first place. But because this is an arbitrage, the second trade is effectively an arbitrage. That's not going to go wrong, guys. That trade there isn't going to go wrong. It is, as I said, effectively an arbitrage. So at that stage, that's now dry. I mean, if it hadn't been for the fact that it was an arbitrage, I'd have been waiting for that to develop from the dollar angle. Obviously, from a real yield angle, you've got a different storyline because if you look in the background, you've got this very, very obvious divergence on real yield suggesting we should be short, very definitely be short gold on a macro scale basis. And it was obviously a very, very obvious level on a macro scale basis. If you look in the background, you can see what I'm talking about. In the background, we had a very, very nice capper buy trade that turned into a sell trade at this price here. And then we had another capper buy trade phase in here, which turned into a sell trade at that price there. And you had those levels already visible. Yes, we did have another level. We had this level here as well. And that's where we got the exit price before these PCE numbers. But you can see that this is a good level. It's a good price, and we get an arbitrage. And we get an arbitrage. The blue line rising and the pink line rising on a green candle is always going to be an arbitrage sell. And taking that arbitrage sell, boom, $600, guys, on an arbitrage trade. Makes a lot of sense, does it not? So does anybody spot these? So can anybody spot the snapbacks? Can anybody spot arbitrage? Anybody spot any snapbacks? Can anybody spot any arbitrage? Let's just look at it from that point of view, guys. So we're looking for two things. We're looking for a snapback. And secondly, we're looking for an arb. So you should be able to spot these. Now that we see the price action, we should be able to spot what a snapback and an arb look like. So if I'm looking for a snapback, I'm looking for the pink line to go the opposite direction to the blue line. And I'm looking for it in a good wholesale price. So I'm looking for the value to change direction as well. And then I'm looking for the value to change direction as well. Okay, so I don't want to be selling into buying and buying into selling. I want to make sure that the snapback has a value divergence. So we can start to recognize that we get a very, very big opportunity to trade a couple of ones. So let's deal with the ARBs first, because they should be the easiest ones to highlight. The ARB is obviously going to be very simple. Price going in the opposite direction. So that looks okay. This is an ARB candle here, yes or no? That's an ARB buy trade right there, isn't it? Would you agree with that? Is that an ARB trade? So that would be an ARB trade right there. So you go from 73 threes to 73 eights. Yeah, it's only 5 ticks, guys. It's $50, but it's an arbitrage. Remember, guys, it's not a swing trade. It's an arbitrage. It doesn't mean it's necessarily got massive amounts of value direction in it, but it's got an arbitrage that allows you to at least see if it's got any direction in it. So that's an arbitrage buy trade. Any other ones? Well, that's an arbitrage sell trade, isn't it? Because the red line actually goes up and the blue line goes up. So that's an ARB sell. So it goes from an ARB, they obviously overplay the ARB, and then they get an ARB sell coming back in, yes? So that's an ARB sell. Yeah? Everybody see it as an ARB sell? Red line went up, blue line went up, yeah? So if the red line went up and the blue line went up, it must be an ARB sell. Yeah? Must be. So that's an ARB sell. And sure enough, 73.8, 60 seconds later, 72.4. Come on, Cooper, that's $140 in 1 minute. I don't know why people aren't excited. You know what I mean? Tough crowd, I'm telling you, tough crowd. 140 bucks in a minute. My God, guys, come on. No ARB, no ARB, no ARB, snapback. Do you see the snapback trade here? So there's a snapback on this red candle here. So you'd have been able to recognize that as a snapback, possible snapback type trade on that one. And again, the volume should tell you that there's a snapback in it. If any, the volume should tell you. But the pink line doesn't want to be going above the previous pink line by much. You know, unless it's massively different, but you get the idea that the pink line isn't above the previous pink line. So that's a good example of a snapback trade right there, because they go in opposite directions. Well, they go in opposite directions here as well. The pink line is still lower. If you look in the background and you say, well, where is this lower than? And you start looking in the background and you can see these price areas here. So you can see that there is a snapback potential sell right after that one, on that candle there. So, I mean, it's not brilliant, I'm not saying it is, but there's a snapback. And then look at what happens here. Is this an ARB trade here? Is this an ARB? Possibly, right? Because the two lines go up, which means the price should have went down. The price didn't go down. So that should be the possibility that very straight after the snapback trade, you had an ARB trade following up behind it right there. And that could have got you into an ARB trade, which obviously then gave you this trade here, and then this trade here. Now these two lines both decline. They both decline on a red candle into the lows. So that becomes a possible ARB trade. Now that's an ARB trade that doesn't make you any money, but it doesn't lose you anything either. The price spins around on the very next candle. You might be saying, yeah, but realistically, you're going to lose money on that trade, aren't you? Well, realistically, if you've taken a buy limit order and you saw what happened in the next candle, you'd have probably says, yeah, realistically, you might lose 2 or 3 ticks. Absolutely, yeah. So yeah, minus 3 ticks. Take it on the chin, right? Take it on the chin. This looks normal. This looks like it could be another ARB buy trade here. But obviously, it's not good enough because you're obviously going to be looking at that saying that should have declined. The next candle did decline. It's not on an uptick, so I don't really like it much. But yeah, you could be on it. A downtick here on both candles. You see it? Is that an ARB buy trade there? Yes. So that's an ARB buy trade, correct? Did you make money on the ARB buy? 71 ones, 72 evens, 9 ticks, another $90 on your ARB. You lost $30 your last trade. You just made $90 on that one, guys. That's not bad. You take that one. Your net $60 up in the last 5 minutes. Doing not bad, guys. Doing not bad. You can make it after all as a local, eh? Possible snapback, but not a good idea. Possible snapback, but not a good area. But the volume's starting to come in on the snapback, so that could be a signal. If you took it on a snapback, you did make money, so but probably scratched out at break even. Probably scratched out at break even. What about this candle here? That looks fair. Snapback candle, yes. Snapback candle. Would you agree that the green candle is a snapback candle? Because it's not in, you know, the volumes, we want to see volume in snapback type trades, you know, because it doesn't guarantee us that we should see the directionality from it, but that's a good snapback trade there, isn't it? I mean, the volume's not great, but the levels are very good in this one. You know, you're probably surprised it didn't get the big volumes, but the levels are good on this one, I think, in the background. You may say, what do you mean the levels are good? Well, the pink line, if the pink line's higher than it was before, so I go along to the pink line over here and I draw a line. Now look at the difference between the pink line. The pink line on that one is significantly higher than it was before, right? So if the pink line's significantly higher, where should the price be? Significantly lower, right? So against that price, the price should be down here, shouldn't it? So we get the snapback and we get macro value divergence with the snapback trade setting up just there. So if we can sell into that at 72s, we know that we've probably got about a $100 sell trade. Remember, this is a 1 minute chart. It's not exactly the fastest chart we've ever looked at, right? So I like the idea of the snapback on this one. That looks like a very valid snapback type trade opportunity. So I do like that snapback. And then we get an ARB trade. That's interesting, isn't it? We get an ARB trade right after the snapback just in here, and we get another ARB trade with big volumes. That's even better, yeah? Does everybody agree we get an arbitrage buy trade here with big volumes? Pink line down, blue line down. That's the perfect arbitrage. Why? Because it's into the low price. It's a stop run. So that's the perfect arbitrage with the big volumes. If you're going to take any trade ever on gold, that's the one you want to be on. That's the one that we did the big arrow on the last time, isn't it? Do you agree with that? That's the one we did the big arrow on the last time. But the good news was you were already getting ready for it because of this candle before. So we were just basically waiting on the big volume coming in to give us that really strong storyline that we were getting an arbitrage buy on gold. And sure enough, you bought into maybe 70.5. It's just traded a high price of 72.5. You just made $200 in 2 minutes, guys. $200 in 2 minutes scalping gold. This is crazy good, isn't it? Crazy good. Think about this wee period of time, guys. The last 20 minutes. You're not far off at $500 per contract, are you? You're not far off $500 a contract. I mean, that sell trade there at 72 is traded 70.5. That's 150. That's 200. That's $350 there. That was 100. That's $450. That was a loss of, say, $50. So that's $400. That sale there was worth a few $100s. That buy was worth a few $100s. That sale was worth nearly $100. So you'd be really bad if you didn't make $500 per contract during that period. It'd have been a really bad series if you hadn't made $500 as a scalper. You're only risking maybe 3 or 4 ticks, 5 ticks. I mean, the loss we gave ourselves there was 5 ticks. You'd have struggled to lose 5 ticks in that trade, but yeah, 5 ticks it was, right? So you can see that this idea of getting into this type of trade, you can make a lot of money in a very short period of time scalping into some of these little setups. Pretty straightforward. Pretty straightforward.